We return back to our Bloomberg contributing editor, Paul Kudrowski, who is also an early-stage venture investor. Also with us is Rick Heitzman. He's the founder and managing director of tech venture firm FirstMark Capital. He's an investor in Pinterest, by the way, a new social network company that just announced a $1.5 billion valuation after raising $100 million from other investors. And gentlemen, thanks again, Paul, for being with us, and to Rick for joining us. So, Rick, let me toss this first question out to you, because we've been talking about this flashing $104 billion valuation. Is this going to fuel a tech bubble here?
I don't think so. What you see in a bubble is kind of people undifferentiated among good and bad companies. And I think that Facebook is clearly head and shoulders among all the companies down in terms of its growth rate, its ability to monetize, its revenue, not only user growth rate, revenue growth rate, and profitability growth rate. So far we haven't seen any bad companies receive a high valuation or a tremendous amount of capital. Although, depending on where we are in a year from now, that might have changed.
How? In what way?
I think that you're going to see more people if it continues, if Facebook trades to a $300 billion valuation, and people get excited and angels decide they need to be in the next Facebook. It's how things started to roll in 1998.
There's a feeling, to Rick's point, there's a feeling of being left behind or left out, right? Which really starts to snowball once you see an offering like this or the kind of valuation, and success, relatively speaking, that Pinterest is having at its current stage, and people just can't stand being left out, right? It's this idea of like hearing about a party that you can't go to, and I keep hearing about this party. Why can't I come? Well, you can come. All you have to do is ante up cash, and once people realize that the party isn't that exclusive, I can ante up cash, then they start bidding for things, and that's when you.
So there's not that situation yet of too much money chasing too few deals right now. There isn't that situation quite yet.
No, as a matter of fact, venture capital is contracting. So interestingly enough, to the extent that we're worried about a bubble, venture capital is seeing year-over-year declines in terms of the actual capital allocated. We were just talking about that, before we came on. And so it's going to take a reversal in that phenomenon more than anything else to really drive it at the private stage.
Rick, you said that it's actually a warning sign to you, or at least concerning, that there are more insiders than usual that are selling their shares in Facebook?
Well, as the allocation increased and the size of the offering increased, the insiders took a disproportional amount of that over-allocation. I think some of the venture firms and some of the people who have been in for 6, 7, 8 years deserve that piece of liquidity, and it's about time. They have investors they have to return capital to. But always insider selling does send off signals that how long are they going to be around for.
And that's the point I think we were talking about earlier. This is this idea of Facebook going public a second time, right? You have companies, you have investors who've been in this for 2 years and feel like, this is the time for them to get liquidity. This isn't them now signing up to be locked up. This is them saying, I got in 2 years.
They've already been locked up.
I've been locked up for 2 years, and now I want out. And it's a perfectly from their standpoint and from the standpoint of their investors, it's a legitimate request, right? I want my liquidity now.
Right, which makes perfect sense, in which case it would make your concerns maybe a little less concerning then, if you looked at it that way?
If you look at it that way, I think you feel differently from the investors who've been in for 6, 7, 8 years as opposed to the investors who maybe just got in 18 months ago. But you're also seeing a more fluid secondary market now with companies like Second Market, and there are some folks who have been able to get liquidity along the way.
Is everybody trying to look for the next Facebook? Is there another Facebook out there?
You know what I always love to say? I love those kinds of questions, because you get that all the time. I'm really looking for the next Google, and my question always is, were you in the last one? And so what makes you think that given you missed the last one that you have any prospect of finding the next one? As a matter of fact, it's even less likely because you've demonstrated a remarkable lack of competency.
Could be staring you right in the face.
Could be staring you right in the face, you wouldn't
know.
know. So it's kind of, in a sense, it's a trap, right? It's a trap to even think that way. Because if you actually did think that way, you should race out and raise a fund immediately, and that you can't tells you that no one else believes that you can spot that next Facebook anyway.
There is a next Facebook out there. I don't know what it is. I think you have to start with, hey, here's a company that's doing something very different and very interesting. And it seems like every quarter or so, the blogs put out, this is the next Facebook, and the New York Post puts it on the cover sometimes. And that's not the way it really works.
Usually that might be a sign to run away, perhaps.
USA Today sometimes is a sign to run away from conventional wisdom. But most of the companies that start off, that become great, start off as non-conventional, doing things differently.
Yeah. And they start off being branded as toys. One of the classic criticisms of the most disruptive early stage companies is people say, they just dismiss it entirely and say that's just nonsense, it's a toy. Facebook was deemed a toy originally, Pinterest deemed a toy. It's really an interesting phenomenon.